Hi everybody, Jeff Yastine here. Make sure to send your questions and comments to my email address. It's jeff@yastine.com, just like you see on the screen here. And of course, subscribe to my YouTube channel and follow me on Twitter and Facebook. I can't help but notice that energy stocks have suddenly and dramatically become quite popular. Since I started mentioning these stocks in videos over the past couple of months, all of these sort of beaten down oil companies have just taken off to the upside in a big way. Chevron up 23%, Valero up 28%, Exxon up 15%, Marathon Petroleum rising more than 40% since those videos. Now, I can't help but also notice my friends and colleagues have no small amount of disbelief and skepticism about the rise in these kinds of stocks. And, that's just typical at the beginning of a big move to the upside or the downside if you're short something. Plenty of people tell you that the trade won't work, and it's only when the stock or sector is up another 20% or 40% higher that all of us, just human nature, then finally come down off the fence. A few months ago, I even tossed out a speculative stock idea, a company called Rignet, RNET, and it's only now at break-even levels, but if you believe that oil and energy in general will continue to move higher, not like a rocket ship, but a little now, more later in coming weeks, well, this is one stock that we expect to continue to work its way higher as well. And it's not for nothing that I predicted it could double by New Year's, and I still think it has a good shot of doing so. We see how quickly things can change. So plenty of you are probably wondering, well, is it too late? Did you miss the boat on old school energy? And the short answer is no, you did not. Now, compared to even a year ago, energy stocks have barely registered a blip higher yet. These stocks still have a long way to run. And one reason is just oil prices. As you can see from this chart, oil's at around $42, $43 a barrel today. There are some experts who think that that's where oil will be for many months to come. My bet is that they're wrong. We'll see how it works. One reason I think I'm right is that I think the supply is limited. As this chart shows, the number of rigs actually pumping oil remains at record lows. It takes time, it takes money, and especially an appetite for risk to bring more rigs online in the fields. Now, energy companies have been burned greatly in past months, past years, and I think they are unlikely to regain that appetite for risk anytime soon, which means fewer rigs out there pumping and less supply. The other thing is I think that there's a play here for the global economy as we see these vaccines move out and people and companies get back to driving and shipping goods and moving around the way they did before. It's not all going to happen at one time, but I think it's going to happen slowly, just like we've seen things slowly gain altitude since the bottom of the pandemic in February, March in terms of the stock market. Now, energy stocks, oil and natural gas and the pipeline companies and firms that transport and process the fuels, they've all been so cheap for so long that even the spike of the recent weeks barely makes a dent in how undervalued they are. And a good example is Exxon. To show you how cheap it is, Exxon's balance sheet has its book value around 177 billion, 180 billion, about 42 a share. And yet, of course, you can buy the stock for less than that. So the stock, in other words, is trading at a discount to what I call its garage sale value. What it's worth if you could pay it all and, gather it all up and sell it at a garage sale for cash. You can buy the stock cheaper. And this is just sort of a typical thing that you see in sectors that have just been beaten down, sometimes for good reasons, sometimes for not. But, inevitably, sectors turn the corner, and this is the spot where you often find great opportunities. But there's something with oil stocks and with energy in general that we have to keep in mind. Oil isn't going away anytime soon. This is not a sort of a binary market in that for one type of stock, let's say electric vehicles and alternative energy, that for those to win, oil has to lose. It's just not the case. The world just does not work that way. And so oil is going to be a part of the U.S. energy mix and even by a larger percentage, a bigger part of the emerging market transportation mix for a long time to come. We can take an example of India, which has 1.3 billion people, and they're setting monthly records in terms of automotive sales, car sales. They're building highways and people are driving more. Now, there's a lot of talk about electrified vehicles in India, but the fact is that 99% of the people can't afford them and won't afford them for a long time. And even if they could afford them, again, the fact is that India does not have the electricity infrastructure to have all those people, plug in their electrified vehicles tomorrow. It's the kind of thing that's going to happen slowly over a long period of time as the utilities and other things in that country and emerging markets, just like here in the U.S., have to go and upgrade their operations. And they do so on a quarterly and yearly basis, but it doesn't all happen at once. So for that reason, when you hear about oil stocks somehow being yesterday's news, the fact is they are a fantastic opportunity to buy. Doesn't mean alternative energy isn't also a great opportunity to buy, but the thing is, just keep it realistic. Look for opportunities, look for stocks that are going up and have great value. And if there's anything I know, I think it's that energy stocks, old school energy stocks, certainly have that as much as anything else these days. If you like what I'm talking about, make sure to follow me on Twitter and on Facebook. Subscribe to our YouTube channel. And again, don't forget to send me some comments and questions at my email address. It's jeff@yastine.com.